Hey guys, welcome to the channel. My name's Max. The channel's name is The Covered Caller. I specialize in analyzing these high yield these high yield income, mainly option based ETFs, but also closed end funds. And we're going to be talking about closed end funds tonight. Let's see what Bitcoin's doing after hours right now. Of course, Bitcoin doesn't have an after hours; it trades 24/7. So let's take a look at her, see what she's up to. Anyone watching the Olympics tonight, the opening ceremonies? I forgot it was on, and I haven't been watching it. Uh, I forgot it was on, but I like the Olympics. I might watch, especially the winter. The Winter Olympics are cool. I love the Winter Olympics. They're cool. Hey, Marcus. Okay, so what am I doing here? Oh yeah, let's look at. Gosh darn. Let's look at Bitcoin first. I didn't really get set up for this properly. Um, okay, well there we have it. So after hours, I guess a new 24-hour day just started. So not a lot to see here yet. Let's go. Let's look at this bar. This is a 30-minute bar. Hey, you little doggy. There's little May. May, do you want to come say hi to everybody? Okay, we're going nowhere on. We're going nowhere fast. We're on a slow boat to China on Bitcoin. However, let's look at the weekly bar. I bet it looks pretty ugly. Need to look at the weekly bar in the market too here in a second. Anyway, we're getting ready to get in the middle of the daily factor. We're just waiting for people to show up. For those of you who don't know, the daily factor is my own metric that I made up, and with AI's help and with other people's helps. But I think it is a better way to judge these funds than even total return. Total return can be deceptive, and yield is very deceptive. In fact, you're better off not even using yield, in my opinion, or using it opposite. Just if you don't know anything else, just pick something with a low yield. Uh, but um, but I invented the daily factor to analyze these. It's hard to analyze these funds because they give you so much of your return back in the form of a coupon, a monthly or weekly payment or whatever, and it messes up the calculus of everything because regular funds or regular investments, you're rooting for the equity to go up, and it's more of a longer term situation. But in these, you can get income weekly or monthly, and sometimes your equity can also go up. It just depends on what the market's doing and what fund you have. Bonds in the house. Hey, Bond, thanks for being here. All right, let's get this show going. Now, remember, this is not financial advice. Consult a professional advisor. If you'd like to support the station, there's a place you can donate right there. And all right, let's get the show on the road. I'm still learning how to use my technology. I want that to disappear so it's not up there the whole time. Or really, I shouldn't. Well, anyway, I'll figure it out on my own time. Okay. So here we go. The daily factor. Closed in fund, Friday Night Lights. And we're in the land of Friday Night Lights down, or I'm in the land of Friday Night Lights. Wrong season. But I'm in the, boy, I can't wait. March, April, May, June, July, August. I have 7 months until everything starts up again. And I can't wait. 6.5 months. Okay, so let's meet our contestants. And I traditionally just start with the highest yield. And we'll just introduce our contestants. So oftentimes and hopefully these are all really closed-end funds. Occasionally I throw in one by mistake that's not a closed-end fund. But so we're just gonna go through them right here. Now I realize the closed-end fund Connect, CEF Connect, is a better way to look at these, but I'm just old-fashioned and I like the way Finviz looks. But if you really want to know the mechanics, CEF Connect is better. But all I'm trying to figure out is, what does the NAV look like? What's the name of the company? SW, or what's the ticker? SWZ. What's the name of the company that sponsors it? Total Return Security, or well, we don't know. I guess we could click on it. It gives you a hyperlink to the. That's the most. I say this every time. What the heck? That's the most plain Jane. That's like a template from 2003, right? As far as web design goes, that was probably designed in HTML, just by hand coded. All right. Well, it didn't look like there was any JavaScript. No, nothing else other than HTML. Pretty basic stuff there. Anyway, all right. Total Return Security is fun. But then the other thing that we really care about is the yield. So this thing has paid about a 50% yield, and the NAV's gone from 619 to 608 over the course of the year. That's pretty dang good. So let's see who our other contestants are on The Price is Right. All right. So next one we have ECC. You guys know what ECC is? Eagle Point Credit Company. I was just getting ready to say that. Eagle Point Credit. I'm just learning these myself. These guys, I'm more into the option-based funds, but this is the same deal. It's just a different mechanism of paying or we can analyze these the same way. So this thing you can see has the kind of familiar high yield chart pattern. That's kind of the old high yield chart pattern, right? Pays a nice dividend, 32%. All right. Eagle Point Credit Company. There's a bunch of credit and loan things on here. OCCI. I bet that's some kind of credit. OCCI. I'm drawing a blank. OCCI is, oh yeah, OFS Credit Company. I was just getting ready to say that. Same, the same chart pattern. Very typical chart pattern for these high yield funds, right? The next contestant is BPI. God, I would think I'd be able to remember one of these tickers. I can't remember BPI. I always forget what ECAT is. GGT is Guggenheim something. And BCAT. Okay, well, we'll learn them together. BPI. And these are going in reverse order of, oh yeah, Grayscale, Bitcoin Premium Income. So this is actually a closed-end fund. So closed-end funds can do options. These guys likely do options. Anytime they use the word premium income, lots of times it's referring to some kind of use of derivatives or option selling of some type. So that's old Grayscale. Let's see who's next on The Price is Right. CCIF. This is called the Covered Call Income Fund. No, that's not right. That's what I say every time, but it's actually called the Carlyle Credit Income Fund. And Carlyle is some private equity guys, some blue blood private equity guys. You think Goldman Sachs is blue blood? These guys are even more blue blood than Goldman Sachs, from what I've heard. Big time private equity guys from, I think they're out of DC, and they're political types. I mean, lots of people in various administrations are partners in this firm, and big money Republicans, I believe. All right. I've heard there's some relationship to the Bushes, but the Bushes have so much relationship to everything. But there's a brother-in-law or something as a partner in this and made jillions of dollars or something. All right, so enough for the blue blood private equity guys. That one, CCIF paid 30%. Now, ECAT. ECAT is, I cannot believe I can't remember this one. What is ECAT? So ECAT is, ECAT is, oh, it's another BlackRock. BlackRock ESG Capital Allocations Trust, whatever that means. I mean, I know what ESG is. I know what capital allocation and the trust is, but all right, well, there we have it. Oh, this is cool. Look at this. This fund itself is in several fund of funds that are based on closed-end funds. It's in CEFS and YYY, both of which we're going to be looking at tonight. Even though those are ETFs, they have a book of closed-end funds in them, so I throw them into the closed-end fund category. Anyway, that's ECAT. So then we have GGT. This is the Guggenheim, GGT. Guggenheim, what's GGT? Oh no, it's the Gabelli Multimedia Trust. Okay. All right. Well, there's a Guggenheim in here too. GOF is the Guggenheim one, I believe. All right. So there we have that one. That's the Gabelli Media Trust. BCAT. So this one was BlackRock, ESG, Capital Allocation Trust. So this is BlackRock, something maybe, I don't know. What do you guys think? You guys know this. BlackRock. Okay. Well, I said it the first time. I didn't think they named two things. It's basically the same name as the other, except the other's ESG. So, all right. Well, I thought ESG and DEI and all that stuff was dead, but who knows? All right. So let's see who's next. SRV. SRV is closed-end fund. NXG Cushing Midstream Energy Fund. And this one is hot right now. As you can see, boy, the NAV's flat. Hasn't always been. You know, it had a 25% pullback in April, but it is flat now. Okay, CLM needs no introduction. That's from Cornerstone. But let's look at it. Let's just look at the chart. These charts can be a little bit deceiving too, because in closed-end funds, Cornerstone has rights offerings, and you can buy it, and you can drip at drip at NAV, or there's something they give you. Well, some brokers let you drip a NAV, and which is an advantage. And then in addition to that, Cornerstone, from what I hear, has periodic rights offerings where you can buy shares at a discounted price oftentimes. So everyone likes this one. This one's, paid about 18%. Then we have CRF, which is also from Cornerstone, also paying 18%. Also, everybody likes it. It's doing a good job. CLM is actually even up a little bit just on NAV, and CRF is probably up a little, about the same just on NAV. Next contestant is GOF. This is the Guggenheim Opportunities Fund or something, or the Global. Maybe it's Gabelli again. I think this one is Guggenheim, though. Yeah, Guggenheim Strategic Opportunities Fund. All right, remember that one next time. So the opportunities haven't been quite as strategic as they were hoping, I don't guess. And they had some kind of something they were invested in went south in October. They must have had. I bet they had Bitcoin, or some kind of Bitcoin treasury or something, maybe. Because we can't look at the top 10 holdings for that, because they do it different. But for that, we would go to CEF Connect if we wanted to follow up more on that. So, and we might do something like that on the winter or something. We might, look in more depth. But FCSO. This one is called FS Credit Opportunity Corp. And I don't know, maybe these guys had some crypto too, because this kind of, or some type of exposure to DeFi or crypto or whatever, mining companies. All right, well, and you can see which fund this is held by. Yeah, I think that's really cool. If you find something you like, but maybe you don't want to buy it, or, it's a good way to do research. Find something you like, and then find other funds of funds or other managers that have it. And sometimes that's a cool way to discover funds. Like you might go, well, yeah, I like this credit opportunity thing. Then you're scanning through here. Okay, BLUX, yeah. VPC, ooh, not good. CY, what the heck? That one looks great. FCEF. And then from there, I say, I want, what is this guy doing? So this is an ETF, but it's in an ETF called Invesco Zacks Multi-Asset. Anyway, I like, that's a good way to do research when you find something you like, to look at other things that it's in. I've never heard of this fund. And look at this guy. Look at these growth stocks in here. Whatever Leggett and Platt is, probably smaller stocks. Value stocks maybe, but man. All right, nice one. We need to Nice one. If that one only paid a yield, but all right, back to the main event. That was FSCO. MLPD. This is some type of master limited partnership, probably MLPD. Global. Oh, that's right. It's the Global X, and they do covered calls on top of it. And it's an ETF. So this one really shouldn't be in here. My bad. I'm sorry about that. So this one has been disqualified. This one cannot win. RIV. RIV is the River North Opportunities Fund. Yeah, not bad. NAV's up, paid about 12%. FAX. FAX is the Aberdeen Asia Pacific Income Fund. This Aberdeen stuff is for real. There's ASGI Aberdeen. I think we're getting ready to come up on one that's always does a great job, or has been lately anyway. All right. Well, anyway, this is Aberdeen Asia Pacific Income, pays about 12.5%. Pretty steady looking NAV. PFIX. This one's not a closed-end fund, I think. I think I may have made a mistake. If I did, we'll disqualify it. This one is called the Simplify Interest Rate Hedge ETF. My bad. That one has been disqualified. ASGI. This is the Aberdeen Strategic International Growth or something, right? ASGI. Oh, infrastructure. That's what I meant to say. All right. Well, whatever. Infrastructure's hot. It was hot last week. It was hot last month. I mean, this thing is just murdering it and paying you a yield. I mean, this yield's almost like free money, even though there's no such thing, because you have an asset that you have a nice, a nice market-like return on NAV, going from 19 to 23 or almost 24. In addition to that, so that, and then you're getting the yield off it. That's just kind of like gravy. And then we have MDST. This one is midstream something. And this one is that's an ETF also. My bad on that one. Sirloin, SRLN. We looked at this on the show today. This is actually the least volatile fund in my entire universe of more than 200 ETFs I look at. Now, it measures the volatility over the past 90 days because I'm trying to pick up on trends and stuff. So actually, over the past year, this doesn't look super unvolatile because of that one move. But you can also see it's pretty, for 6 months, it traded between 41.50 and 41. In a 50-cent range. It's pretty, pretty low key. And this one's an exchange traded fund also, my bad. So it's disqualified. But Sirloin is one that people like to look at. I thought that was close. But GGN, this is the Guggenheim, or is it Gabelli? This one is Guggenheim, I think, but I forget the other part. GGN. I'll remember next week. We need to do this every week. I haven't done it in about a month. We'll do this every week from now on. We'll do it Friday nights, and I'll have these memorized. Oh yeah, the GAMECO, Global Gold National Resources and Income Trust. Wow. So this thing's incredible. It's up 20% on that. Well, we can see right here, performance on the year, 31%, and that's NAV only. That's NAV only. Because they show the total return somewhere too. And anyway, all right. Well, that's great. That's a good one. GGN. I think GGN or ASGI might be the winner. And that one is a closed-end fund. Just make sure. The last one is UTG. If I missed any closed-end funds, I'm sorry, out of my list. And I'm sorry I put in the ones that weren't closed-end funds. This is the Reeves Utility Income Fund. It pays the lowest yield of all of them, but has good NAV, and it looks like it's very low volatility. All of these closed-end funds are traditionally low volatility. Here's the lowest volatility here is the lowest volatility. I have a list of the lowest volatility ones. Yeah, right here. This is a list of the lowest volatility. No, that's not the list. I really do have a list somewhere. I'm going to produce it in just a second. I guess it's like this. I'm trying to make the point that a lot of these, a lot of the closed-end funds are super non-volatile. But let's look and see how many of them are. Actually, Sirloin, these are actually ETFs, Bondi, HYGW. VF actually is proving me wrong. It's proven me wrong. Actually, the closed-end funds are not super unvolatile. The least volatile closed-end fund that we've looked at so far is RIV, and it is 50% more stable than the market. But then we have some other closed-end funds down here that are on the stable list. But I'm kind of surprised that one we're just looking at didn't make it. Anyway, but Sirloin is actually pretty safe. There's CRF. CRF's volatility is 26% more stable than the broader market. So good stability. All right, CLM was just down there a little bit further. It looks good also. All right, so let's look at out of all of these, let's look at the best NAV return. We kind of were looking at that, but it was ASGI and GGN. I mean, ASGI, NAV return right here is 16.4. I mean, and it's paying a yield. The yield's basically free money. GGN's not paying a bunch of yield, but I mean, quarterly NAV return. And then the worst performing ones are BPI, CCIF, ECC. Let's look now at the most stable. I guess I could have looked at it this way instead of going to the other sheet. I just wanted to see how many of the top ones were actually closed-end funds, and actually not a lot. They were mostly bond-related ETFs, from what I could tell. All right, so here is the stable index. Yeah, Sirloin right here is 5 times as stable as the SPY, or it moves about 1/5 as much, around as much. MLPD is not a closed-end fund, right? We decide that. But RIV is, and RIV is super stable. So anything above 1 is more stable than the broader market. So your stable ones are, at least this quarter, and it can't predict the future, showing you what has been stable. MDST, BCAT, SWZ, CLM, of course, CRF, of course, FACS, RIV, MLPD, and Sirloin. Okay, so now let's look at the Quandex. The Quandex is basically the long-term max factor. But you have to been around for a year to be on the Quandex, but a lot of these have been. So we'll just, in fact, only one of them hasn't, and it's BPI right down there. So remember, the Quandex is based on a year, and it's ASGI, and who could argue with that? I mean, because over the past year, even though we're just looking at the past quarter, but over the past year, ASGI went from 1785 to 23. I mean, that's like 30% or something, and then they're paying a yield on top of that. So yeah, GGN looks really good as well over the past year. UTG, FACS, MLPD, BCAT, all of them look good. Okay, the short-term max factor is actually the max. The max factor is that because it's a trading index. So the max factor is short-term max factor. Let's just let it rip. It's ASGI, but number 2 is RIV. There's a little bit because of the recent performance. RIV has been hotter lately than whatever number 2 was on the Quandex. Number 2 on the Quandex is GGN. Well, GGN has been doing fine lately, but whatever. There's ones that are doing better. So there's ones that are doing better. So that's your daily factor tonight. Hope you guys like that. Vaughn is saying Cornerstone took a nice dip and you bought some. Well, that's good. I'm glad you got you some. Oh, look, my thing disappeared. Okay, I'm getting better at using this technology. So now, Oh, that's what I really needed. I really want to put my like banner up there when the show first starts for like 60 seconds. And then it'll go away after that. That'll be the way to do it. And then right at the end for 60 seconds, won't have to be up there the whole time. Okay. So anyway, thanks for letting me work that out with you guys. All right. So is there anything else you guys want to look at or talk about? Or hey, well, I'll give you guys a sneak preview. You guys are here. There's 19 of you guys here. I really appreciate you guys. So I'm going to give you a sneak preview. Also, I'm making an Amazon order tonight. I'm finally going to get that. I'm finally next week. I promise. I'm going to order it tonight as soon as I get off here. But I'm gonna start using the professional microphone. You won't be able to see it, but it should sound a lot better. I know the audio hasn't been great lately. I've been trying to speak up and project my voice to you guys, but it should get better next week. And I'm going to have a third monitor. And so anyway, Amazon, I'm making an Amazon order tonight. Things should get better around the studio. And I'm also going to get a multi-touch surface. Those three things should make this go a lot better. And I'll be able to blow the screen up really fast like I used to do on my laptop. Put it, it's going to go a lot better. So I'm really excited about that. I am super excited about that. All right. So you guys want, if you guys want to talk about anything, put in the comments. If not, that's fine. Well, I'll let you guys get out of here, go to the club. Either which way is fine with me. But let's go to your videos. God, I lost another like 3 subs. I'm just bleeding subs. And that's fine. I know it's not your guys' fault. I'm trying to do a good job. I mean, no matter how hard I try, I'm just bleeding subs. Anyway, maybe I'm just not meant to be at 5,000. Maybe 4,000 is more my speed or something. All right. Well, so the next one is called Preparing for the Next Bear Market. Well, I don't know why it has that. It has the wrong, I was going to say it has the wrong thumbnail on it, but I'll fix that. But it hasn't been released yet. Ignore the thumbnail. So let's see if this thing is working. Hang on here. Hang on. Let me do this. Okay. Give you guys a real quick sneak preview. It hasn't come out yet. I strive to be your number one source for how you see how it's doing since then, and then we'll get to the good part. If you can wait till the day before the crash, there we go. Our head around what it looks like. I made a PDF to. There's this case by Dynamic Caller Strategy, and Marcus has already read the article I put on Patreon. But anyway, let's just watch a little bit of this. We'll watch about a minute. Then I'll see if you guys have questions. And if you don't, we can leave. But otherwise, let's just explain the way. We're looking at 2 funds. One of them is really interesting and is a little bit harder to wrap our head around, in my opinion. So I made a visual aid. Anyway, this will be, you can download this. This will be over there at my Patreon for free. So go check that out. The time to hedge obviously is before the storm hits. You need to, you guys have heard it before. You need to buy, insurance before the hurricanes, before it's hurricane season. You need to, that no one's going to sell you hurricane insurance the day before a big hurricane. You have to prepare. You have to do this ahead of time. The same thing goes for the stock market. You can wait till the day before the crash. Lots of times the day before the crash, the market's already started to crash. Volatility's high and you don't get and you can't sell it as high of a price. The whole idea is to sell high and buy low, right? All right, so we're 16 years into one of the longest bull markets in history. The S&P 500 has delivered annual returns at around 14% off the 2009 bottom. NASDAQ has been even more, spectacular. I'm not saying that, we're going to crash tomorrow, but the ETF industry has been responding to investor demands. I'm sure it's safe. It's just new. If you're gonna allocate it, maybe smart. for a while, but you want to, it's hard to do it over an extended period of time. So, and that's not really the goal. The goal is of this type of strategy to give up a little bit, a reasonable amount of upside to protect the F for you guys, of course. All right, so all right. So anyway, there's you guys' free sneak preview. So I'm going to get out of here and go make a thumbnail and post it. Now that it's so late, I'll probably have it come on at 7 in the morning or something. You guys can watch it when you get up. I was trying to just show the good parts, and I couldn't find it. I have a really cool graph, and you just have to watch it. There's a good part in there. I just was hitting on all the bad parts, I guess. All right, guys. We'll be looking for that tomorrow. Also, this weekend, I have the top 20 video coming out, the top 20 daily factor. Past couple of weekends, I've just been doing it live, but I used to record it and do it. So I don't know how I'm going to do it. Probably be live tomorrow night. I think that's fun. So I'll be back here tomorrow night and we'll just run the top 20. We can look at the whole list. And then coming up next week, I record a show with the guys from Quantify, David and a different guy than I talked with last time, but one of his sub-advisors. I forget the guy's name, but he's from a company called Convexitas. So, and I talked to David. So I talked to them Monday, pre-recording that. That interview will be on Tuesday, but they have some new stuff to cover on these income stack products and some stuff they want to go over. So that's going to be exciting. Be looking for that on Tuesday. Then we have Mike Coe from YieldMax, and I'm going to interview him on Friday. Now, I haven't decided whether I'm going to do it live or pre-record it. As of right now, I'm going to do it live. I sent a live invite, but I emailed him. I said I might change that to pre-recorded. And I don't know yet. I'll take advice from you guys, or if you guys want it live, I'll do it live. If you guys don't care, you get what you probably don't. But in any event, well, guys, thank you so much for being here. I appreciate all 19 of you guys. And remember, as always, this is not financial advice. Check anything you hear here with a professional financial planner. If you care to support the station, you can always do so at paypal.me/MaxConvexity. And other than that, that is all I have for you guys tonight. Well, thank you so much for being here. Happy Friday night, and we will talk soon. I'll either talk to you in Discord or be watching for my new video tomorrow and leave me a comment. Thank you so much. See you.